Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
This time frame in here, that was interesting information, and as well, I believe that was on the last presentation, or if not, it is in the Commodity Traders Almanac, and this is a shameless plug, the 2009 Commodity Traders Almanac, which I co-authored with Jeff Hirsch. And Jeff Hirsch, you may be familiar with his name because his father started the Stock Traders Almanac. Well, we have a new version, the Commodity Traders Almanac, coming out this year, and it illustrates some of the best trades each month, the seasonalities of each trade, including the major foreign currency pairs. So with that said, that's you're actually getting kind of a first-hand taste of this. You'll notice that this shows from January to January. It was last done in 2008 as we were preparing for this. So what's interesting is that this graph that you see right now was actually done well in advance of this year's move. So what did this year do? Well, if I could tell you that the Japanese yen, as it trades against the dollar, again, this is indicative of what you would see with when we trade with the ISE's index, okay? The ISE's yen FX index. Again, remember at the beginning of the presentation we said it was quoted in dollar to the foreign currency? When you look at the media and you hear about yen, they're quoting yen as it's weighted against the dollar, inverse relationship, okay? This is from the Foreign Futures Exchange, the CME's Japanese yen futures contract. So let's say I could tell you that, hey, from March going into on or about the middle of August, the market goes down. But from the middle of August, what happens? From the middle of August, the Japanese yen bottoms and goes up into about the middle to the end of October. Third week of October. And this is, by the way, going back 33-year historic tendency of the Japanese yen. So at this point, you're probably saying, well, gee, now I know that. It probably would have been a good buy. And in August, that would have been a pretty good call. In fact, not only did we have, and for some of you who are familiar with my work, a high closed doji pattern right here, but notice that the system did generate a buy signal, and as we ended September, monthly pivot said this might be the low, and this could be the high, and as the market gets into the third week of August, we normally rally. And again, we took the high out like a hot knife through butter. Now, pivots, obviously, at the end of September, in the middle of August, going into September, this was good information to know that you want to stay on the long side of the market. And that's something that if you're trading with not only pivots, it gives you an idea of where to scale out, where to take a profit. And you know what? This is important information to understand the seasonalities that will help you to stay on the right side of the market. And as you can see, even a trading system which generates sell signal, it still maintains the negative momentum. It still maintains the negative momentum. A good trading system really can't identify seasonalities unless you program it in, but it should detect changes in market conditions, bullish or bearish, and thus identify market directional changes. So if you have a technical system that, number one, can help to illustrate the changes in positive or negative momentum, in this system it does. It tells us that the bearish forces have stopped, and thus now we have a buy signal. But most importantly, the seasonalities of the market gave us the idea not to be short in August, and certainly not to be looking at sell signals until about the third week of October. So again, this year, most of the markets, and I'm going to give a list of them: gold, crude oil, soybeans, copper, absolutely amazing. What's even more amazing is the price velocity and the magnitude of the price moves. They have, without a doubt, though, really exasperated or taken out everyone's expected ideas of what the market may go to. So the seasonalities can help you to be a little bit more grounded and focused in your trading and stay more disciplined by saying, you know what, I know the market's high, but this is the problem, folks. If you're bearish, until you get a sell signal, you're best to wait until the actual signal manifests itself, because the old adage is, just because it's high doesn't mean it can't go higher first. And most times than not, you can be right in the market, but your account size can't handle being wrong for too long. So it's better to be a little bit later than earlier and catch a portion of the trend. More importantly, if you're going to try to tackle the markets and start to scale in, unless you have very, very deep pockets, it's best to use options, and especially with an exchange like the ISE, which mirrors the price of the currencies as it relates to dollar to the currency, as I'm showing you here in this example. So if you're a stock trader right now, or a Forex trader for that matter, using the ISE options certainly, and paying attention to technicals as well as seasonalities can certainly help you. Here, by the way, is the symbol in the with trading the ISE's yen index, the yuck we call it, YUK. It's not yucky or icky, it's yuck, YUK, the yen FX index. Now, this is again a weekly chart, and it shows how the market has come off its high. And obviously, looking at the seasonalities of the weekly chart, you can show that the market has adhered to this seasonal tendency in the market. It's just been an uncanny situation. Now, this is this week, and I wanted to illustrate how pivot points can really help you every day, day in and day out. This is a different market, obviously, than I showed with the euro currency. It's differently traded than a spot Forex to the degree that it doesn't trade 24 hours around the clock. But notice that almost on every given day, except for, again, this particular day, we didn't see much action. There wasn't a whole lot of range. But on the close, it said, hey, the market's bullish. Here's going to be the potential high. And pivot down to S1 should be the support, which it was. At the end of the day, it said, hey, we're still bullish. If the market pulls back to this predicted support, it's still in a bullish mode. And the next day, hey, the market's still bullish. This should be the range. And the market's still bullish, and this should be the range. So not only using pivots, but also the person's sentiment indicator, as you can see here on Thinkorswim's platform, it helps not only give you a clear, defined description of the market condition, but you're also trading within the seasonality of the market. And that'll help any trader, whether you're your long-term, short-term, or intermediate-term trader.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.